Hey guys, it's Tanner Manson from Future Investing, and today I want to talk to you guys about the idea that Salesforce stock might be going to $300 a share quicker than we thought. But before we go any further, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, if you could, hit the like button down below and subscribe if you want to see more financial content just like this. Salesforce, if you guys don't already know, is the global CRM leader, which takes up about 19.8% of the total market share. This allows companies of practically any size or industry to get better, deep analysis of their clients, store information, and practically run their whole businesses through one singular app. And personally, the companies that I work with also use Salesforce on a day-to-day basis. So I'm hands-on with this product all the time. And I gotta say, I've done business two ways, before we got Salesforce and after. And I would pick Salesforce 10 times out of 10 because they make processes so easy these days. But I'm not here to talk to you about the software or get into anything like that. Let's talk about some of the finances. Let's just jump right into the numbers. Salesforce just recently released their Q2 2021 numbers, so these numbers are really up to date. Starting with revenue, this company brought in $6.3 billion into the company, which was up 21% year over year. And their current remaining performance obligation, or RPO for short, is now at $18.7 billion, which is up 23% year over year. If you don't know what RPO is, it's like future earnings from contracts and invoices that we just haven't received yet. This is due because Salesforce sells multi-year contracts that they'll start to pay out year over year over year. So it's even great to know that even that going forward is still growing at about a 23% year over year size, so we know that that money is going to continue going forward. Now, our operating cash flow is actually down 10% to $390 million, but this is because we've had a large expense of Slack for $27.7 billion that finished this quarter. Now, that wasn't all paid through like cash. Some of that was like long-term debt as well as like, stock options. But still, as our debt starts to go up, we're going to have new expenses that operating cash flow might stay a little bit lower for the next couple quarters or maybe even years. But you have to remember that that is going to be, offset from some earnings that are coming from Slack, or if that's even growing even faster, then it might be getting, offset quicker and quicker and quicker. But we'll talk more about that later. As well as having a non-GAAP operating margin of 20.4%, which is up from last year, although next year they're expecting it to be 18.4%. But who knows, right? If we're beating all the numbers from this fiscal year, who's to say that we won't beat it next year as well? All this added up to adjusted earnings of $1.48 a share. Whenever we compare that to the EPS of what they thought we were going to get of 92 cents, we slammed this quarter out of the park. They even finished off those numbers by saying that they expect Q3 numbers, revenue guidance to be about $6.8 billion or up 25% year over year. And Amy Weaver, the CFO of the company, summed this all up in a pretty good quote. Listen to this. "We exceeded our financial expectations in this quarter, achieving record levels of new business and saw strong demand across our portfolio. And we are excited to build on Slack's momentum with the power of the two companies now together." I mean, they're forcing me into a corner right now. I have to say it. This is ecosystems and moats. I know I say it like every single video and every stock that I cover, but it's really what I care about the most. Whenever you look at their subsidiaries like Tableau and MuleSoft and, now Slack, they are building out a one-stop shop for their customers that are just undeniable, and they're able to charge whatever price that they want to charge for monthly or yearly subscriptions because you cannot get a software like Salesforce anywhere else in the entire world. And that's like the hardest job to do, right? To make a product that's so hard to replicate for like big companies like Amazon or Microsoft or Google, not to make their own CRM and actually try to compete, but having to buy your product because it's just so compelling is what makes this company a 5-star stock. Anyway, I'm getting off topic. All I wanted to say is that Mark Benioff, the CEO, is like one of the most brilliant CEOs that I've ever seen. And his ability to understand the true meaning of his product and know who to sell it to and how to capture their full attention without going anywhere else to look for, different products or better pricing. And even though this company is trading at that 60 times forward P ratio, and a lot of, smart investors, and if you ever read about valuations in companies, you would think that's very, very rich, especially for a 20% growth. But institutional investors are not buying any of it, okay? Not buying the books, I mean. They're buying a lot of CRM stock. So first of all, 80% of the company is owned by institutions. And yet, even though there's such a high amount that's holding by institutions, the percentage of float or the short interest is only 1.6%. That's not a lot of people betting against the company. And whenever we think of like 80% of the, institutions holding this company, that's not the only amount, right? We also have 3.6% of insiders holding this company, which are people like Mark Benioff, for example. I know whenever you're looking into like SPAC companies and other small companies, you can have like 15%, held by insiders. But 3.6% on a $260 billion company is absolutely massive. Whenever we put that up against something like Facebook, for example, which is another like Wall Street stock that like is just so beloved there, for example, there's only 0.6% held by insiders in that example. Whenever you compare that to Salesforce, and yes, the prices of the stock do vary a little bit, but still, if you were to add up those market caps and equal them out, still CRM has a higher held by insiders than even Facebook does. That is a crazy statistic. I know it doesn't, scream out because it's not like a 20% or something like this, but 3.6% on $260 million over a company that's being held for, built for multiple decades, over 20 years, is a massive amount to still be betting on a long-term future in this company. That's a very exciting statistic. Now we're holding on to total cash around 9.7 billion, where our debts are a lot closer, around 15 billion. So I know the debt's a lot higher, but like I said, that was a huge, over 90% of that debt is because of the acquisition of Slack, which is hoping to bring us in even more money and pay that down very shortly. And I mean, it's not, the best acquisition, 100%, like we just got an absolute steal. $27 billion is really expensive. But sometimes you just have to pay those huge prices to stay number one in the industry and make sure that our product is not even comparable to any of the other ones around us. Now, there was one statistic I did not like this quarter. Maybe you can tell me in the comments how you think about it, but this is how I think about it. So headcount, they spoke about it being up 21% year over year. This is the amount of employees that work for Salesforce all across the world, which is around 65,000 people globally. They post that on their website like they're super proud of that, and that's really good for the company. And maybe for the economy it is, but not for Salesforce. And that number can be good whenever we're talking about developers or like programmers for their company, but the majority, the high majority of that number is a bunch of support staff, different language translators, a whole bunch of the workspace that doesn't actually make any new profit. It just makes their their product more accessible and these sorts of things, which you could argue that they wouldn't be in the position that they were without these sorts of things. But I think they're relying too much on this human contact support, which is amazing, get someone on the line very, very quick, but it is very expensive to have. And this is why we have such low margins. I mean, we have tiny margins whenever we compare to other CRM and SaaS products. But I mean, this is what a world-leading company needs to do, right? They're first through the door. And I know CRMs have been around forever, but no one has taken CRMs as globally and as mainstream as Salesforce has. Like I said, they own 19.8% of the entire market share, which is literally not even comparable to their, any next competition. No one even comes close. They make $4.3 billion in North America, up 20% year over year, $1.4 billion in Europe, up 32% year over year, and $600 million in Asia, up 26% year over year. I would like to see way higher numbers in Asia. I know that they are growing at 26%, but I'd hope it'd be closer to like 60%. Like the number's just so low for the actual size of the economy in Asia. Although it is a very hard market to penetrate, it is one that's just way too big to pass up. I've got a couple quotes here that I just want to say. I think it really sums up the business. One is from Brett Taylor, the Chief Operating Officer of the business. Our products are just more relevant than they've ever been. I think every CEO is realizing that the pandemic is not going away. We're in a new pandemic world, an all-digital, work-from-anywhere world. Companies are investing in their digital infrastructure so that they can set themselves up to grow in this new world. And I think that is like such a powerful statement. It's like, yes, COVID can come and go, but the idea that this is a brand new world and that we are not going back regardless of whatever we consider the pandemic to be. This is a work-from-anywhere type of place, and having the ability to, give your office in one sort of online CRM ability, yes, you will pay, a high amount per employee that you have. But in some of these places, like having an office in downtown, Toronto, New York, California, or even Austin, Texas, what's booming, is so much more expensive than, just sending the office home with your sales staff or whoever, your marketing staff, and letting them do everything from home as long as they're able to bump out their numbers. For which Salesforce just lets you monitor it even easier. So it's a full package, all-in-one company that you can buy. It's like you're buying your real estate, your cloud storage, your everything all in one, neat packed device. Mark Benioff summed it up in a press conference recently, purely just saying sales, service, marketing, commerce, platform, Tableau, MuleSoft, and now Slack are all multi-billion-dollar plus products delivering customer success like no other company. And I think truer words have never been spoken. I mean, honestly, this is a $1 trillion company. How long it takes, I don't know. But Mark Benioff, his plans are not limited by, even this CRM platform. I heard he even wants to take on, a Microsoft Office and doing the whole Office suite, but a Salesforce version. They even just announced Salesforce Plus, a streaming service that'll inspire and motivate everyone in, whatever role and whatever type of sales or marketing or anything. And they're going to, just for an additional cost, you can bundle that in with your subscription. And employers are going to want to do that because it's, if there can be some sort of statistical, sort of performance enhancing from these sorts of things, it's only going to push the product even more. And Salesforce is going to have data on it. That's for sure. I could go on and on, but I got to keep this video short and consumable. Salesforce is going to be up there with the Googles and the Microsofts and trying to dominate the entire digital space. I think they're led by one of the best leaders in business of all time, maybe one of the best for sure. And I'm just excited to see where they go next. I mean, his product lines and the way that he develops his business, I would never think of the way he goes into these sorts of things. And I just keep getting surprised and more satisfied by everything that he puts out. And there's a reason why there's an 80% institutional buy on this stock. But comment down below if you think that this stock is going to be $300 a share, if you ever own any stock, or if you've just been looking into it. And don't forget, you got to smash that like button and subscribe down below if you want to see more financial content just like this. Anyways, guys, thank you so much for watching. Stay safe trading, and I'll see you guys on the next one. Bye for now.